Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, July 25th, 2018. In this video, I wanted to cover some trade ideas. We have about maybe 2 dozen or so here, and it's just a random collection of trade ideas. I went through a watch list yesterday and started marking some trade ideas, both long and short. These are not the same or overlapping any of the trade ideas that I had from last week. In fact, I shared only a small fraction of those that I found. I have through scratch pad with about 3 pages, well over 100, both long and short setups. And the thing is, it's earnings season, so I'm continuing to call that list. I've added a couple trade ideas. I think we added another one today, GDX. But again, with earnings season, especially this week, we have a lot on the economic calendar and a lot of big companies reporting. And so we'll call this hump week. I think, we'll still be in earnings season and we still have some big companies coming up in the coming weeks like Apple. But once we get over the hump this week, I think things will start to taper off. And just on that same note, remember to check your holdings, your positions for earnings. This is earnings season. You're going to have companies gapping either for or against your position. So it's that decision is yours. Some traders will hold a position in earnings. Others will close it out. Some might hedge up. And most importantly, if you take a setup. Now, I have not scrubbed these setups for earnings. I wanted to say that and be very clear on that. If I put an official trade idea out there during earnings season, I'm going to look ahead, if it and make sure it doesn't report, a day or two before. So again, if you like anything you see here, I would strongly encourage you to check to see when they report earnings. And if you decide to take a look at the chart. Go back a couple years, see how that stock has acted after earnings. There are some companies that do a very good job of managing expectations and giving pretty accurate guidance, and therefore you have very little surprises. And then there's other companies that like Netflix is one of them that has a history. It's a big company, but it's all over the place after earnings. Both we had some big gaps earlier this year to the upside where it ran, and then the other day it went to the downside. So, all right, let's dive into the charts. This one is KNX. I mentioned it yesterday, I believe, in the trading room. Now, I'm a little apprehensive on this one, but I did mention it as a long bounce trade off support with about maybe 9% upside. And what I'm looking at here, this 34.76 level, you can see here we had quite a few reactions in the past at that level, which helps to validate that support level. And you have bullish divergence, potential divergence. We still need to confirm that divergence with to have the PPO turn back up here and cross back up and put in a higher low. Right now, the momentum indicator, this momentum indicator is heading down, and that could continue down. So, and like I said, yesterday was a bloodbath in the trucking sector. There's a lot of big red candles. But with that being said, it's already up a little bit today. And I share these trade ideas, and this is very important. This goes to the official and the unofficial trade ideas. My job isn't to tell anyone what to buy or sell. It is to go through the charts as objectively as I can and share setups, regardless of my own bias in the market or in a particular stock. If I see a trade setup that looks bullish, even I might be bearish. I may not take that one, but I'm going to pass it along. So if you are bullish on the trucking sector or transports and you're looking for a potential long trade idea, I can tell you it's objective to take it here or yesterday at that support level with a stop not too far below, especially if these divergences are confirmed. You can look for a bounce all the way up to the top of that the downtrend line there, or maybe that 38.87-ish level, possibly beyond. And my next target would be about 42.45 if this one plays out. So there it is. Again, one that I'm not putting as an official trade idea and I'm passing on personally, but you may want to take it. BEAT, biotelemetry. This one is in a nice bearish rising wedge pattern, confirmed with negative divergence. Everything I like to see, just as it was back here. A lot of this stuff is, I don't want to oversimplify it, but it's simple in the sense it's wash, rinse, repeat. Look for divergent highs, look for divergent lows, look for impulsive breakdowns. When you see a well-defined trend line like this, you see an impulsive breakdown, and that from there, from the highs, when that one put in the divergent high, it dropped about 38%. And so what do we have now? We've come full circle. This is another rising wedge pattern. And actually, this one just broke down. So technically, you could short this one here because there's your breakdown yesterday. Big impulsive red candle. We closed below, and we're back testing the trend line from below right now. You can see that candle. Look where that body is. Tried to pop above their intraday, but right now we're on that trend line. So it's objective here. You had the divergence, negative divergence confirmed. Target on that one, I put a line right here. Call it about 39.50 or so, give or take. Um, but again, you may want to check it for earnings. I don't know if it's reported yet or not. Maybe yesterday. That might be the cause of the big bearish candle. ANF. I think the apparel stocks have gotten ahead of themselves. I pointed out some, bullish developments back here a while back, and they really ran more than I thought they might. It was a short squeeze up, and I believe that most of these apparel companies have gotten ahead of themselves now. This one included ANF, and it's dancing the line right here, about 24.50ish. I could move that line a hair lower, but basically what I'm looking at here, what stands out to me is we had a pretty well-defined uptrend line, breakdown, back test, and it's moving lower and needs to break below support. And if it does, this one's probably headed lower. It had a divergent high right here at the highs as well. So that's ANF, CONN. Cons Inc., specialty retail. There it is. You had a divergent high right here. These charts aren't fully marked up. I came across a lot of these stocks yesterday, but there it was. Back then you had a big divergent high, and that led to a drop of, I'm just measuring if I can grab without moving anything. This is going to be a rough estimate. I have to grab a little high, but about 40% drop off the highs there. And that ended with, surprise, surprise, divergent low, bullish divergence, and that sparked the rally, which took it up about 65%. So this sucker moves. And what that tells me is adjust your position size if you're going to take it, because that will allow you to give it more room on a stop, and without losing any more money than you might normally take. In other words, if you adjust your position size down by half, you can, if you normally allow for a 5% stop loss, you can allow for a 10% stop loss. It'll help keep you in the trade. Now, the flip side is the profit potential is a lot higher because I just showed you this thing swings. These little trends that you're trading here off the daily time frame are measured well into the double digits. So if this divergent high, which is also a failure here, it's had multiple attempts at this level. You can see here all year it's struggled and has been rejected off every attempt to take out this level here so far, starting to move impulsively lower, negative divergence, everything I like to see, and this one could head a lot lower. You can see this is just an initial target, but this one has the potential to come all the way back down here to $15, I believe, and there's some negative divergence not drawn out, but you could just add your divergence lines there on the weekly chart. It's not confirmed yet, but it's certainly potential divergence, and again, a lot of potential in this one. As far as profit potential, that is, and just check it for earnings and make sure it fits your unique risk tolerance, trading style, and objectives. UIS, Unisys Corp. Nice trend line. It was, one validation, and that's fine. I often get asked, how do you draw a trend line? I think trend line drawing is an art, not a science. I see multiple reactions. If I just back this out, if I were to erase that, I'd see a perfect trend line. So numerous reactions. So I'm fine with excluding that. Wicks, these shadows on the candlesticks, those are fine. I want to capture the most amount of candlestick bodies and or shadows possible, and this is just a well-defined trend line. So you set a price alert right there. For a break of that trend line, you have negative divergence, and that would break of that trend line, especially if it's impulsive. Ideally, you want to see impulsive selling on a trend line break, and particularly, especially daily close, that helps seal the deal. Nothing's 100% in trading, but it helps avoid these intraday whipsaws right here, like you had when that's what that candlestick shadow shows you, an intraday break and then recovery of the trend line. And this was also, by the way, back then, you can see this was a downtrend line. There was a breakout and a back test. So there's a lot to see here on this chart. But right now, this is what I'm focused on. That's already in the past. This is the current trend line to watch, and there's a negative divergence, UIS. Let's move it along a little faster here, SHLD. highly speculative. A lot of people, myself included, believe this company will probably not be here in a few years from now. This is Sears Holding Corp, SHLD. But along the way, there's been short squeezes, bear market rallies. It's only $2 stock. You're getting down into close to penny stockville. And usually, once stocks cross down below this range, especially below the $1 mark, there's no going back. They can play some shenanigans, reverse stock splits, all that good stuff. Share price dilution, try to shore up some capital, but I don't know. Be very careful. I'm not crazy about this one, but it's worth pointing out. You have positive potential divergence. Looks like the PPO is flattening down, pointing lower now. You want to know what I think will happen here, that $2 level looks very important. It's been tested before. I think this stock will probably punch down through there, have an impulsive move, suck in some shorts, squeeze out some longs, and then reverse. And that's where, if you can get that breakout, especially find a reversal candle after a breakdown, or possibly wait for a recovery back above $2, and then maybe target up here to this trend line. If it can take that trend line out, great. Here's some targets here, 382 and 539. So there's a lot of potential there, but I can just say this: don't put in any more than you're willing to lose if you wake up and this company has filed for Chapter 11 bankruptcy, because it's going down to 55 cents or whatever, and then eventually zero if that happens. So just keep that in mind with your position size. And risk and reward go hand in hand. So you put in, I don't know, whatever your number is, 1,000 shares, $2,000, if you're willing to, lose 1,500 or more of that if they declare bankruptcy. But your upside potential, if this goes up here to 539, you're making, you're making 3,000, 3,300, $3,400 if it gets up there. So that may or may not be worth it to you. It's up to you completely. Kronos Group, Biotech. What stands out to me, we have this uptrend line here, which has been broken and back tested. That's bearish. And then if you discard that, we have these two yellow lines. That's a symmetrical triangle pattern, very close to symmetrical triangle pattern. Either way, a well-defined uptrend line. So there's breakdown number one, back test. If it breaks this trend line, then I think it's headed quite a bit lower. It's a biotech. So again, careful with your position size. The thing about biotechs, unlike just about any other stock out there, you can manage risk on most companies when you know earnings are coming. They come every quarter. They're well announced in advance. You can check the earnings date. Biotechs, they're a different beast because they have, and I don't know what's in this company's pipeline, but most of them have drugs, one or more drugs in the pipeline. And these clinical trials, they can come out with positive or negative results or approvals from the FDA anytime. And I've seen these stocks gap up and down 50% easy. So in the smaller the biotech company, the fewer things in the pipeline, the more prone they are to those sudden gaps. So if that is not your cup of tea, don't trade it. And if you do trade it, just don't put too much money in there, because you cannot avoid getting caught on the wrong side of a gap. No, it goes both ways. You can get caught on the right side of a gap. That's great. So just keep that in mind when trading biotech stocks, that they are unique in that you can have those gaps come out of the blue based on clinical trial data. All right, Teligent, TLGT. This one has a big gap to backfill here. I mean, technically the top of the gap is right here, but I see some reactions up here, so you can put a line there as well. Maybe it wants to go in and backfill that gap. Very often, once a stock enters a gap, it will backfill it. But so far, it's been lackluster. It has entered the gap, but it's been met with some selling. And I see negative divergence here. So I favor a break of this rising wedge, break to the downside of the rising wedge pattern. And this one will probably come back in. It's a drug manufacturer and probably target about 365. It may not sound like a lot, but from 418 down to 365 or so. That's about a 12% gain. Just be careful shorting low price stocks. All right. Next one up, ACBFF. If you've been with the site for a while, you know I love this one. It was one of my favorites. And probably, I think, quite possibly the only penny stock that I've ever added as an official trade idea on the site. I thought it had a lot of promise, both fundamentally and technically at the time. We started buying it back here at 55 cents. This thing went up to $12 almost. And, I made my thoughts clear in recent months. I've been bullish at times and bearish at times on the cannabis stocks, and most recently, especially leading up to that vote in Canada a couple months ago to legalize it, or at least, to legalize at the recreational level. That's when I said I think the gig is up, at least for a while in these stocks. I think they've gotten ahead of themselves. I think they're overhyped, and they have been drifting lower. And this one's not looking so hot. I think it's probably going to head lower. It's just clinging to support now around 545. And I think there's more downside over time in these cannabis stocks. Again, I just think they're overhyped, their profit potential and everything else. But be careful with this one. It moves quick, but again, I think it is a potential short trade if it goes much lower. And ACIA, not one of my favorites, but it stood out to me because it's compressed in this trading range right here between about 35.56 and 31.86. You can see it there. And if it gets above there, it has this trading range here. Actually, you can go all the way back here and see how that was support from above, and then it traded in here. So if it can pop above the top of this trading range, it'll probably come in and backfill that previous trading range up to about 42 and a quarter or so. Of course, if it breaks down again, not good. So again, not one of my favorites, just something I figured I'd pass along. CGC, Canopy Growth, another pot stock, one that I liked very much in the past. And at this point, look at this big divergence here, negative divergence into the highs, a well-defined trend line, which recently broke. In fact, this one I did highlight last week or two when I did the trade ideas. And I think it might have been above trend. And so it's already fallen. Again, it doesn't look like much. When you have a stock that's moved so much and you look at a log scale like this, that drop is about 17%. And I can't remember if I highlighted here or here. Maybe it was already broken down. But either way, and that if it drops from 24.68, that's support right now. So really move that line a little lower now because we overshot it just a bit. So call it 24.21. If it breaks down below there, that's support. That's what's held contained prices in recent days. Probably coming down here at about 1980, and that's about an 18% drop. So again, risk and reward go hand in hand. If you're going to short these pot stocks, don't go too big with your position. Downsize it. Easily put a half or a third position to make 18%, 15%. Give yourself a 5% stop loss, something along those lines, and you might get a nice little trade there. PODD, Insulet Corp, nice uptrend line, divergent high, breakdown. It's dancing on support right now, 83.25. Yesterday, a little fake out move intraday, but it's back above it now. Well-defined level. Look at all these reactions there. So if it gives up that level, look at this. That's a pretty bearish looking PPO right there. Attempted to make a bullish cross, failed. It's below zero. Indicators are pointing down. It hasn't yet reached the 30 level on the RSI. So I think this one breaks down. I think it does it soon. Again, check earnings. It's a medical device stock. And boom, first target there about 72.27, 76.34 next target. And possible that it works its way down further. But as of now, those are the targets I'm looking at. XPO. XPO Logistics, Integrated Shipping and Logistics, breakdown and dancing along 97.40 support. If and when that level goes, probably coming all the way back down here ultimately to 75.60. It's a lot of meat on the bone on that one if it does trigger that next sell signal below 97.40. AAXN, I really like this one. Axon Enterprises, Aerospace and Defense. They do report on August 7th after the market close. I checked earnings on this one because I'm considering this as an official trade idea. Look at that steep negative divergence, clean rising wedge pattern. Yeah, I had that trend line right here. You can draw that trend line a little tighter like that if you want. And today's breakdown was an intraday false signal, whipsaw signal. But if you want to give it, this is what I call the BOD, benefit of the doubt trend line, where if I have a trend line like this, and I just exclude one little peak there, but I can also do this and capture today's lows, this reaction low and these reaction lows. That's the benefit of the doubt trend line. The stock is in an uptrend. Therefore, give it the benefit of the doubt. Don't short the earliest sell signal because the trend's still intact. So that's why I'm giving it this benefit of the doubt trend line and, break above there. I think I already set an alert on this one. If not, I'm going to go ahead and set another alert to give me a heads up on AAXN. Next one up, XNCR. Xencor biotech company. Here it is. Nice, pretty well defined uptrend line. Divergent high right there. We had a divergent high at this point, had a correction. And right now we're thinking about an equal high, which is still negative divergence because the indicator is making a much lower low with prices making equal highs. Certainly room for this one to push higher. It's at support now. And keep in mind, when I show you, there's a difference between a trade setup and a trade that's already triggered an entry. Some of these I've showed you have already broken down. And this is one, it's looks like it's going to break down, but it's at support right now. And as I like to say, support is support until and unless broken. So meaning this stock can catch support here just as it did here, 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 and it can bounce and it can work its way up within this wedge and maybe break down months from now. Maybe never, well, sooner or later it's going to break down. It's just a matter of will it break this trend line. This is a nice looking pattern, but again, so what you do with these, you replicate the chart, use log scaling. That's what I use on all these charts. I feel it's imperative when you're looking at a stock that's price ranges from about $20 up to, $45. Log scaling will give you an accurate picture of the history of that, whereas linear or arithmetic scaling will not. Next one up would be VEEV. Viva Systems, Technology, Health, Information Services, bearish rising wedge. There it is. So it's yet to trigger a sell signal, but it's at that sweet spot of the apex of the wedge. I mean, it can certainly work its way up higher, but as of now, if this wedge is going to break down, it could break down any point now. You have the negative divergence, everything else I like to see confirming that. XNCR. Xencor, did I already cover this one? Yes, I did. I must have jumped. Yeah, I did. Jump. Let's go back here. PPS. Here's a potential long setup. We had a trend line right here, a primary uptrend line, broke down, and it's had a correction. Since it peaked right here, the stock has already fallen about 45%, and now it's setting up with this. You have bullish divergence on the or positive divergence on the daily time frame. Little wedge type pattern here, so maybe look for a pop on that one. And, first target be about 157. It's a low price stock. Keep that in mind too with your position size. And this one could easily work its way up to 190, possibly more. Be a pretty good move up from a buck 42. BLD. Got about a dozen more to go here, guys. BLD, I was going to post this one yesterday. I saw it break down. Again, I came across these yesterday. Had a nice impulsive breakdown and close below and follow through today. Still looks like an objective short. Where's it going? Well, 67.90-ish. Be the first target on that one. 62.37. I'd have to study it a little further, but either way, looks like there's more downside there. It looks like it's hammering off the 200-day moving average today. Trend indicators bearish. Again, divergent high, everything I like to see. So I think in the coming weeks to months, that one goes lower. GES, another apparel store. We had a divergent high right here, followed by a pretty sharp correction, and this is a kickback to resistance. So a lot like we shorted Netflix the other day. We waited till after earnings. It was a big drop and then a big recovery, and we nailed the, waited till it pushed back to resistance, entered short, and we're very profitable on that one right now. Same story here with this one. You had a pretty decent resistance level with former support around 23.70, broke that support, and it's back testing. So this is about as objective as it gets. You had the divergent high, initial kickback rally. I think it comes back down here, minimum to this 1943 target. And from where we're at right now, if you shorted it here, you're talking about almost a 14% profit on that one. And you could set your stop not far above that 2370 level. So I'm trying to grab where we're at today. And that would be about a 6% downside to a 14% loss. Not the best RR, but one that I think will work out. And the closer you get it to 2370, obviously the better your entry price is. But we already hit it once, so we may not hit that level again. And next up, ONCE, speaking of once, Spark Therapeutics just broke down recently. Since it broke down, here was your first red candle right here on a closing basis. And we've had 1, 2, 3, 4 red candles. And see how the selling starts to accelerate once the market and market participants realize this breakdown is the real deal, not a little whipsaw signal. These were intraday breaks. And that's why I say you really like to see that daily close below. That's what you got here. And every day since it's been red. Today's a little relief rally because, again, the stock, since it broke down, okay, this was where it closed the day before the breakdown. So I'm measuring from there. The stock fell, 10%. So it's only natural to get a kickback rally along the way, some minor support there. But if you want to know where I think this one's going, about 60, 65, 90 or so would be my initial target on that one. ZG, I don't know why Zillow has two symbols. I think it's the same share class. I don't think they have Class A and B shares, but either way, Zillow Group. Here's one draw. This is symbol ticker ZG, and it looks like it's just now clinging. It's close enough, slightly below the trend line. Put in a divergent high recently. My target on this one, I have a couple levels. Definitely this trend line here. That would be, let's just call it my initial swing target, my preferred where you want to cover it, probably get a good reaction on that. But there's also support just below it around $51. And it also trades under the ticker Z. There it is. So this one, when I draw this, I have it just right on trend now. So it needs a little more work to the downside. And then you can see the target on the ticker Z. And the levels are a little bit different. So there's I'm trying to draw an arrow tool here. So that's what we're looking at. And that'd be a pretty decent drop on Zillow Group. Now, it hasn't broken trend yet. And it certainly has the potential to work its way up in here. So two things you need to do. You need to check earnings, and ideally you want to wait for a breakdown below this. It could happen now, or it could happen after another thrust up within that wedge. And that's symbol ticker Z. TSRO. TSRO. Potential long in the biotech sector, negative, positive divergence down here, not confirmed yet. These indicators still heading lower. That means we could go like this, and the divergence is burned through. But here's a downtrend line that could trigger a long entry. PIR, bottoming play. This is Pier 1. I wouldn't be surprised. There's so much money sloshing around in private equity firms now. I think this one was private and went private public over the last decade or so. Either way, it's publicly traded now. It's PIR. But potential buyout candidates, $2.16. I don't know what's going on with that company. Maybe they're just out of vogue now. Nobody's going to Pier 1 anymore. But I like it has potential bullish divergence soon to be confirmed. We can confirm that divergence. I'll give you targets right here. Remember, it's a low price stock, so it doesn't take a big move in a $2 stock to put some coins in your pocket. That would be a 15% rally up to the 248 level. There's a little gap there at the bottom of that gap to target. Then the downtrend line, then 290. Those would be my initial targets. So it can take out that downtrend line. The potential here at about 374 and actually a little more than that. I would tell you right now, let me just keep it clear. My final target, if we can go on break this trend line, is about $4. So that's a near double in the stock, and the potential is certainly there in the chart. I don't know what's going on with that company fundamentally, but the charts usually are a much more accurate predictor of where prices are going. DS, Drive Shack, divergent high, minor trendline break. We're right at trendline support. So you don't short it here yet. Maybe a little kickback rally, but you can set a price alert, a fairly well-defined trend line. And if and when that goes, I think we come all the way down here. That's about 466, that support line right there. JBHT, JB Hunt, another trucking stock, divergent high, broke down yesterday with all the other trucks, but it's kind of holding its own right now. It's also danced twice on, found support on the 200 EMA right there. I don't know if you can make that. There's a red line right here at the bottom of that candle and bottom of today's candle. That's the 200-day moving average. So if that goes, I think this one will continue down to about 112 and ultimately down here at about, darn it, trying to turn the price level on for you, about 101. All right, 3 more to go. Well, 5 more to go, sorry. C, D, and S. Cadence Design Systems, rising wedge, potential divergence still working its way up, also challenging the previous highs. So no sell signals yet, but one to watch for a sell signal. 1, 2, especially a failure here. It looks like it's trying to poke its head above those previous highs. If it fails soon, like I always say, I don't chase breakouts that have negative divergence. Some breakouts are the real deal, and you want to buy because the stock's at a new 52-week or all-time high. Everybody's profitable, so on face value that's bullish. But more often than not, breakouts that occur with negative divergence fail. So there's one I'd be looking to position short. Your sell signal would come on a break of that rising wedge pattern. UHD, I mentioned to somebody today, they asked about XHB, which is a home builders ETF. Yes, Home Depot doesn't build homes, but is one of the largest components because the home builders ETF holds home improvement stores. Bearish rising wedge. Breakdown of that brings us to 190, 190, as well as this primary uptrend line. That would be my target, the first of either or there. Negative divergence, everything else you like to see. And that's also their partner in crime, Lowe's, or competitor, I should say. There's Lowe's, same story, rising wedge, negative divergence, just ripe for a breakdown. Check earnings on those. I don't know if they've already reported yet or not. And two more to go. AAP. Advanced Auto Parts, uptrend line just broken today. It's on support, negative divergence. So that one's, I think that's pretty thinly traded. And then GDX, I already mentioned GDX. That was an official trade today. It's not really running yet, but I think it has. I still like it. I wouldn't have put it as an official trade idea if I didn't. So there it is. We had in the 60-minute chart here. We had a divergent low there, divergent low there. I'm referring to this positive divergence drawn down below, divergent low there, and a divergent low here. So nothing's guaranteed in trading, but all we can do is look for these certain patterns or criteria. There were the rallies in the past, and so I expect a rally up to at least that T1 level, possibly all the way up here to 22.75, and who knows, maybe more if gold starts to firm up. But as of now, that's all I'm looking for. Let's wrap it up here. Long video, but again, I wanted to get these out there just to share some trade ideas, and I'll continue to cull through this list as well as the other setups that I had from last week and try to put some more trade ideas, especially companies once they've reported and we have their earnings out of the way. Then I have a little more confidence to go ahead and add those. But keep in mind, even if they have reported, with all the big market moving events and companies that report this week and next, you're going to see most likely some volatility in the market. So probably not a bad time to keep things relatively light for now, and then start to begin to engage these markets a little more aggressively if the charts tell us to over the next upcoming weeks here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.